Most people in crypto don't have a real strategy. They jump between hype coins, chase pumps, and FOMO into trends, then wonder why they keep losing money. I get it, because I was the same when I started. I thought making money in crypto was just about finding the next hot coin and riding the hype. I was wrong. It wasn't until I built a structured long-term investment strategy that my portfolio started to grow consistently, without stress, without gambling everything on random plays. Today, I'm going to break down the 3 exact strategies I use to manage my portfolio, grow my wealth, and stay ahead of the market without chasing hype. No fluff, no recycled advice, just raw, tactical insights that actually work. Stay until the end because I'm also going to share the one mistake even experienced investors make that completely wreck their portfolio. Let's get straight into it. Strategy number 1, the core portfolio, aka 80% of my portfolio. Most people overcomplicate their portfolio. They own too many random coins, have no structure, and don't actually know why they're holding what they hold. This is where most investors fail. Instead of trying to chase every new project, you need a solid foundation, a core portfolio that gives you exposure to long-term upside risk whilst minimizing the risk to the downside. Here's how I structure mine. I start off with the first bit, the boring eating your veg. 50% in Bitcoin and 30% in Ethereum. The final 20% can go into blue chip altcoins, solid projects with real adoption. Bitcoin is my foundation because it's the most secure, most liquid, and most proven asset in crypto. Institutions, billionaires, even countries are adopting Bitcoin as a reserve asset. If you don't have a Bitcoin, you're missing the most reliable wealth-preserving asset in the entire space, right? It's a safe bet. Ethereum is my second biggest position because it powers the entire crypto ecosystem. Regardless of what people say, it's the leader in the space. You got DeFis, NFTs, layer 2 scaling solutions. Almost everything is built on Ethereum, and with upgrades like staking and layer 2 scaling, Ethereum is only getting stronger. Now, I know people like to talk about other layer 1s and other platforms out there, but to this date, Ethereum is the true proven one, let's face it. Finally, we'll go into the blue chip altcoins. These are the best of the best outside of Bitcoin and Ethereum. I don't hold 100 random altcoins. I carefully choose only 2 to 3 high conviction projects that have real use cases and institutional interest. What I don't do is I don't over diversify. I don't hold too many coins. One of the biggest mistakes people make. I don't trade my core holdings, so the Bitcoin, the ETH, my long-term portfolio, it's not up for trading. If I think it's going to go down in short term, I'm either panic selling or I'm holding. There's no trading with my long-term bag. And I definitely don't panic sell during dips. Instead, I have the conviction to buy more. This is why it forms the core 80% of my portfolio. If Bitcoin ETH starts to fall or we start to head into a bear market, I'm comfortable adding more. I'm focused on how many Bitcoin and how many Ethereum do I hold because ultimately that's what's going to grow my wealth. If you don't have a core foundation, you're not investing. Let's just face it, you're gambling. Strategy number 2, the rotational play. Okay, the 15%. This is why I outperform the market, right? This is the bit that I'm trying to really get some return on. Instead of holding 100 random coins, like I said earlier, I focus on 2 to 3 high conviction plays and rotate them based on market trends. Here's how I do it. I focus on narrative timing. Every cycle has a hot sector. Right? You get your AI narrative, you have the real world assets narrative, you have layer 2 scaling narrative. You've got to be able to ride the narrative and pick the best tokens in that narrative. I then want to look for the high risk to high reward plays, right? This isn't a long-term bet, it's a rotational play, so I'm happy to take more risk if I see there's some higher return here. And then I want a clear entry and exit. And I think this is what differentiates somebody who's a little bit more sophisticated, somebody who's taking crypto a little bit more seriously and trying to build some serious wealth, is they have those clear entries and exits. They have a plan. Not FOMOing in, not because your friend told you, not because the market is dumping. No. You have a clear plan which you execute on. Let's take some examples. In 2020 to 2021, DeFi was booming, right? I was in early. You jump into the DeFi plays early. In 2023 to 2024, AI coins were exploding. I got positioned and made sure they're in my portfolio. In 2025, you saw the year start off with AI agents and you get positioned early. That's the key. You got to find out what the narrative is and you got to get in. The key, you don't chase trends. You position. This is the difference. You position before they take off. And that's the key. The best investors are getting in before the mainstream, before the average Joe or YouTubers talking about a crypto. The big boys, the whales, the real wealth builders, they're already positioned. Here's the thing, I don't buy when everybody is talking about a project. I identify early stage trends, allocate before they go mainstream, and then rotate into new opportunities before the hype dies down. And that's a key thing, guys. You gotta get out before the music stops, right? It's like musical chairs. You gotta get out before the music stops and rotate to the next project that you found. This is how the smartest investors in the world operate. Strategy number 3, the cash and opportunity fund, 5%. This is where most people fail. They go all in. They get excited in bull markets, and when a dip comes, they have no dry powder left, no cash on the sidelines. And this is what really separates a sophisticated investor from somebody who's just dabbling in the markets. You can tell. Ask them, how much cash are you sitting on right now? If they say 0, what are you talking about cash? You can tell they're not very sophisticated. Any sophisticated investor I know sits on 10, 15, sometimes at least 5% cash, ready to buy the dip. That way, you're buying when markets are panicking. They sit on the sidelines, they wait for a pullback, and then they scoop up the best assets at a discount. This is how you set yourself up for failure by not having cash ready. My rule of thumb is always keep 5 to 10% minimum of my portfolio in stablecoins. Sometimes, depending on the market, or if I don't have other good opportunities I want to ape into, 12 to 15% of my portfolio can be in cash. Now, of course, you don't want 50% of your portfolio in cash. That's silly. You want your portfolio to grow, but you need some to be able to buy when the markets are panicking. When there's fear in the market, I buy. If you guys have been watching me for a while, you know that is my mantra. When there's euphoria, I tend to sell, right? When there's fear in the street, I want to be buying. When there's excitement and greed and everybody's talking about something, I start feeling a little bit nervous and I want to get out of the market. I don't chase pumps. I accumulate when others are panicking. Let's take some examples. Bitcoin at 30K, nobody wanted to buy it. That's exactly when I was buying it. Buying Bitcoin at 100K now, everybody's FOMOing in. Right? And that's exactly where you want to be trimming, getting ready for the next pullback, which is what we're seeing in the markets right now. Having a cash reserve lets me buy the best assets at the best prices whilst everyone else is panic selling. And that's the fundamental key. Not only can I bring my cost basis down, it's stopping me from panic selling. All they can do, because they've got no cash on the sidelines, is they go, oh, I've got to do something. The market's dumping. I've not got any cash to buy more and bring my cost basis down. Therefore, I'm going to panic sell. I'm doing the exact opposite. I've got my conviction, I'm not being shaken out on my existing coins, and I'm using my dry powder on the side to pick up some more. This is a really, really important strategy. This is what the high net worth individuals are doing in crypto. The whales, the sophisticated investors, they make sure they've got some cash, but more importantly, they've got strategies. These 3 strategies change the game for me, guys. Honestly, a core portfolio that I don't touch. Rotational plays for the big gains, right? Those risks you want to take. You hear about a project, you hear about a narrative, you want to get in. And then having that cash on the sidelines ready to buy the dip. Let's face it, if you don't have a clear structure, you're just setting yourself up for failure. You're that gambler. You're that meme coin guy who's going for that 1000x. You're not a serious investor. If you're a serious investor, you've got a strategy. And if you want to use the exact blueprint I use to structure my portfolio, I put together a free guide. Make sure you download the Crypto Exposure Blueprint now. I'll leave it as the very first link in the description. And let me know in the comments, what's your biggest struggle in crypto right now? I'll be answering some of the best ones in a future video. Hope you guys found this video useful. If you like this type of content, smash up the likes. Do not forget to subscribe, and I'll see you in the next one.